Hello traders, this is Imi from iTradeAIMS.net. Welcome to my trading room, and today we are going to talk about risk management, the daily stop, how to manage your risk. Today I'm going to talk about the concept of the session or the daily stop loss. Why do we have it? Why is it important? And what is risk management in general? So the first part of the video is my review of my trades that we took yesterday, the 26th of June, the 25th of June, yesterday. And so yesterday was a very good day. It started a little bit jittery, but later on it was beautiful. Actually, it wasn't that beautiful. It was not as beautiful as the video before. So that day, the market, I analyzed the daily chart, and from daily, I dropped down to hourly, and I found out that there was a higher chance of price dropping. And because I knew that, then I was more bold because I had confidence in my decision and traded that really nicely. Then I analyzed that if the market was to continue doing that, then yesterday was supposed to be good, but it wasn't that really bombastic kind of a day. It kind of stayed sideways. So in this next video, you will see that after that, I'm going to show you some of my trades. I happen to record sometimes my live trades, and I record my comments and stuff. So I've done that. And it is a day of learning. So today I hit my daily stop loss, and this concept is very important. So we're going to talk about the daily stop loss, why it's important, and why you must have it in your trading plan to keep the equity curve going up smoothly. Because if it keeps going up like this, that's fine, but if you have these wild swings, that's not good. This is not good for your health, and it's not good for the health of your account. So very important point. Let's do that.
Let's have a quick look at the DAX. Some lovely trades today and lovely ideas. I mean, so the London Open, I was looking at the chart here, obviously. So this is the first thing that happened. I went short and immediately realized it's not playing ball, so I got out there. So that's around minus 13. Price goes up, comes down. Let me just mark this and go to the M5 chart. Or actually, let me just bring that over here. As you can see, I've used the box only on the M5 chart just to see, so I could focus on the levels only. So if you look at the M5 chart here, price was below the box. That's all I needed. But the worrying things were these levels to the left. But I knew that if price kind of tests these levels and continues to go down, then obviously the DAX volatility will take it further down. And that's what resulted in this trade. So took the trade, trailed it, excuse me, trade started from here, came around here. So that's around 73 pips or something. And then if I trailed the box, it would be exactly the same result. Then I went short here because if you see this bit 1049, and that's 1050 here, similar stuff. So the problem here is that price moved too far too fast, so gators are away. Actually, let me just bring the proper template, makes more sense. So we have the hunt signal. Now, I didn't want to miss the hunt signal, but I had this in mind that there's this angulation. So if you look at it, this is the angle that goes down. I don't know if you can hear me properly. So strong angle down, pull back up. Usually this kind of results in something else. Now, there's another reason for this, what it actually had happened, but let's not go into that for now. So if we go up, price goes up, comes down, you have a hunt signal here and a setup one here. So if you look at this, this is a setup one, but if you look at the wave 4 is quite impulsive. Although it does create a fruit, then it goes sideways. So yeah, definitely worth taking. But as soon as you realize it's not playing ball, you just quickly exit. That's what stop loss is for. So another rent. Or did I take a rent here? Yes, so comes here, another rent. So the rent paves the way for this, and I had a realization that this thing was actually reacting to a level of a higher time frame. So I think now appropriate time for it to look at it. So let's go to the daily chart, and this is what I saw. Actually, let's go to the hourly chart so you can see it clearly. This is that level. So this is that box. If you look at the hourly chart, 2 days to the left of this and 2 days to the right of this clearly means this is a box low for the daily chart. So that's that low. If you identify these levels around the the low of the tail, and also where it opens and closes, those levels are something to point. So as you can see, yesterday it stopped at this level, so you have that in mind. Even during Asian session it came to that level. Even if you didn't recognize this level, you would have seen this. So clearly you can see this in an hourly chart, or even on the M5 chart. If you look at it, if you look at the M5 chart, let's go full screen, you can see that this is yesterday's low, so it's clear to you. Now price goes through it, hits these levels, cannot clear those levels. Basically, new buyers are introduced at this level, so price goes up, comes back, traps us into a setup one short. Go to the M1 chart now, and then goes up. So this is a classic breakout setup. So if you had that information behind, you would consider this as a 1-2, because this is 1, this is ABC. As you can see, the poking C of the ABC. So I went long here and just had my target point here. So I took another 65 or something on this. So this was a beautiful morning. I thought I was done, but then I saw this, took a trade, and then I thought, okay, plenty of profit is there, so just let it run. It didn't really turn into anything. In the end, it closed break even here when I wasn't even looking. So I had my target all the way at target zone 1 up there, and I thought maybe this will turn into something, but it didn't. And oh yeah, I actually took a trade on the cherry here as well, which turned into a rent. So this took a percent away, and this brought nothing. This brought a lot, this brought a lot, and there was a small rent and a small rent here. After that, I haven't traded, but if I was looking, when you have this situation going on, you have a 3 and a 4, and then the 4 is not followed by a wave 5, which is perfectly fine, especially when market is going sideways. This will happen. So it doesn't, and then when it breaks down with volatility, then that means the sellers have taken over, and when it pulls back, and look at it, this is like a 50% pullback, gives you a setup 1, bang, you go short. So this would be a nice, lovely short, and I think it hit target zone 1 pretty nicely because it's 50%. So yeah, it hits target zone 1 here. So that's your trade, 20 stop loss and probably 40 target points. So that's it. One more, and now you have a 3 here, and so you'll be looking for another trade here, but it doesn't go that way. It goes up, so nothing to worry about. Now it goes sideways, and if you see this is a 3 and this is a 4, you also had another trade available on this, which I didn't take because I'm done with DAX today. So that was some quick analysis of today's trading. Okay, so you saw the analysis of yesterday's trades, and now we're going to look at today's trades. So what you see on the screen right now is how we saw the first setup on the M1 chart just before the London Open. So it was a very enticing setup. Although there were some problems with it, I kind of ignored them and I paid the price. So the next I'm going to play for you the trade that I took just after this, actually at the London Open, which I call the LOBOT method. So I would bend a few rules based on the momentum of the trade. Not recommended when you first start, you have to stick to your rules, but the way to trade the London Open and its momentum is slightly different. I enjoy doing it. I look at where the market is going and then I follow it, but then I have to manage my risk. The most important bit is how to manage your risk. So what we have is I have a 3 strikes and out method, so I would risk 1% per trade. And if my first trade is a rent, we call it a rent, a loss trade, then I would go for another one. If that becomes a winner, it will be a 2R winner because my wins are usually 2R. So I would be 1% in profit. At that time, depending on the situation, I can leave the screen and finish it. But if the market is going strong, now I have 1%, I can actually easily risk one more trade. So if I take one more trade, that becomes a rent, I would be back at zero. I still have the 3 strikes available to me because I'm not down. So that's how I played. But if you were to take a trade and you go down 1%, and then you take a second trade and you're down 2%, now you're really in a hole. Now, the only hope you have now is to have, if the market permits, if the situation is good, carefully you take that trade. And if you took that 2%, you are back to zero. It allows you to then continue on trading because then you have 3 strikes again available for you. So that's how it goes. The games keep going. But suppose you have 3 losers in a row, either because of the market or because of your mistake. Now, if it's because of your mistake, you're done for the day. You're not going to try again at all. It's because of the market. You're now 3% down. If you took the 4 trade, there is a chance that you might go to minus 4%. And you can only come back to minus 1% because you probably make 2% in the next trade. You will still be minus 1%. And if you're sitting at minus 1% and you are 3 strike and done, you cannot trade again. So you'll have to finish the day with minus 1. So the best thing is to do 3 trades, very good trades if it's 1%. If you want to take more trades, then there's a trick about it. Then you'll have to go with 0.5% risk per trade. Now, if you have set up a 3% or a 2% drawdown period for the day, for day trading session for a small account, then you can then take 4 trades for that because you'll be risking only 0.5%. And if you hit 2%, you stop. That's the most important bit. And that temptation after that, like when you are minus 2% and then there's a setup, that's the hardest thing to do. You have to stick to those rules to keep the equity curve going up like that. So let's now look at the first trade I took. This is just a recording of the trade and I'm talking to myself. So I hope there's value in it for you.
The gyration. So it's a nice setup one at the LO. But there are loads of levels to the left, stuff like that. Don't be scared. Have your stop loss where it is. If it's gonna hit it, it will hit it. If not, it won't. There you go. It's going to hit the stop loss, or maybe not. We'll see. If it was gonna go down straight, it would have gone down. This is not like what's it called? US 30. US 30 does that kind of stuff. So what I'm doing now is I'm playing with momentum. I lost the short. So the simple idea is that if it doesn't want to go down and it has momentum, then it wants to go up. I'll try it once. So that's 1 rent. This one should become 2R to cover the minus 1% rent and bring 2% profit. And simple strategy. I'm not going to pursue more than this. If I do that, then it's going to be gambling. And looks like it's just going up and down, not moving. So I'm going to trail the candle or bring the stop loss to here, because I don't want to play this game anymore. I want it to be moving clearly on either direction. This is just gyration. There isn't enough power in buyers to take the price up. There isn't enough power in sellers to take the price down. So, not a fun game. Here we go. And that's it. This is LO done. How long did it take? 2 minutes? 3.
Okay, so what you saw there was my live trade at the London Open. This is LOBOT. It started very well. The pattern was good, but the pattern failed, and then I went with one momentum trade, which is okay. So I'm not down 2%, I'm down minus 1% on the first trade, and I minimized the risk. So that's the little trick that I used. I used the candle that broke the box. Then I put my stop loss below that low, which was indicating that if price comes back to the box, it's probably going to go all the way down. Now, realizing that it's not minus 2%, if it was minus 2%, both I probably would have stopped, or I would have gone with a 0.5% risk for the next trade. But it wasn't full 2%, and the situation was still good. So I realized it, and then I took another trade, but I made a slight mistake. In this business, sometimes tiny mistakes can ruin things, you know, screws the pooch. So let's have a look at the next trade, how I messed it up, and how then it affected the overall profitability of the day. It's very important and very interesting. Frustrating for me today, but I look at the profits for the last 4 days. It has been a fantastic day. Every day was 4, 5 to 6%. So if you end up with one day losing day, not a problem. It never ends. You know, the trades are going to keep coming. As long as you keep enjoying it, it's a fun game. So let's have a look at the next trade. So in this next trade, I made two critical mistakes. One, the box is too big, and the other one is the level to the left. My entry should have been below that.
I want to take this trade again down there, but I think I got my slightly wrong because should have been below this level, because it's kind of a range at the London Open, so it might cost me an unnecessary rent for just 1 pip. So I could have done that, but looks like it is trying. No, see, that level was very important because it's giving me those jitters, giving me the scares, right? So if this was just 1 point below this, I'd be safe and I wouldn't have to go through these emotions. So these things are important. But it certainly is a setup. It's going down. If you look at the 5-minute chart, you can see clearly this is not the spot it should have been. It should have been below this level and this level. Now it's going to go up, and I can't stay in it for that long, and it will give me a rent and go down further, which is really painful. And because I already had a rent, and this could be my third one, I can't trade anymore. So here we go. Nah, definitely going up. That's it.
So as you saw, I have made 3 trades and all of them were losers. So the idea here is that if you want to keep your equity curve running up smoothly, then you have to have a daily stop. Just like, and this is a very important concept, which has allowed me to never have a big spike down in my equity curve. And the reason is that you must have an account-wide stop. So these are the a few type of stop losses that you must have. I was discussing this with Sam the other day. I think we had a 1 hour and 45-minute conversation about this because it's a powerful concept. And I keep repeating this. Trading is nothing but risk management. It's all about risk management. If you manage your risk, that's all there is to it. So although after stopping, it has cost me this setup that you see that happened a little bit later, which could have recovered some of the losses. So what would have happened is that when I hit -3 or -2.5, this would have brought back 2%, which would have finished the day break even. but it would be a difficult choice, because what if this one also turned into a -1 and then it would be sitting at -4, and I would have violated my rule, which would then allow me to force me to ensure that I have my disciplinary procedures acted upon. So I have in my trading plan, and in our members area we have that trading plan shared, the detailed trading plan, where you have to take this decision. So in the trading plan you decide, number one, your account stop loss. So what is the stop loss for your overall account? -30% is what is for this industry, what people use. So let's say you have a $10,000 account and you started trading, and this is crucial. Assuming that your discipline is around 70%, like you are following your trade plan, that is an important factor in there. So assuming you are at 70% and then your account goes down to -30%, that's one way. You will have to stop and you have to look at the overall strategy. What is going on? Is it the strategy? Is it the market? What's going on? The second thing, if you hit -30% because of the lack of discipline, that your discipline score was less than 70%, then you don't need to look at the strategy, as long as, for example, assuming you are using our strategy is proven and tested. But if you hit -30%, that means you are not being disciplined. And if you were disciplined, then it's a different thing. So that's one thing. Account has to have a stop loss. The second one is either a quarterly or a monthly. So at least a monthly you have. So because we like to track our performances monthly and weekly basis, -10% is the most accurate figure, usable figure that one needs to have for a month. So let's suppose you are day trading, and your trading was so bad, either due to discipline or due to the market conditions, that you hit -10% on the 10th day of trading. You stop. That's it, period. Because the same principle would apply. If you continue, you could go down to -15%, and that will be bad for the equity curve. Likewise, you need to have a daily stop loss. So our rule is 3 strikes and out. It keeps the account going up. Even though after the 3 strike and out, the market might go crazy and wild, it does not matter, because you do not have more money available to you to trade anymore that day. It's depleted itself. It's like, one of those apps. You run out, then you have to wait. Or Candy Crush, you do those, and then you run out of those game, and then the game wants you to either wait, or it asks you to actually share it with your friends on Facebook. That will allow you to earn. So that kind of keeps the things going. And in trading, we have to enforce those on ourselves. If you go -3% or -2% or the daily stop, you stop. That's it. You come back tomorrow. Today's game is over. If you adapt this rule in your trading, you will never lose your account. It's just not possible. Have you heard about those people who blow their accounts? They don't blow their accounts because of bad strategies and stuff. They blow their accounts because of bad risk management. So this is one of the most important message that I can give to any trader, to myself, to the trading community, the AIMS forum, and all of you on YouTube here. So risk management is key, and I hope you learned something. So what you see on the screen is I'm pointing to the chart where there was a beautiful setup point, but I missed it because I didn't have anything left in me. That's it. If you like this video, if it was of value to you, please hit the like button and also comment why you liked it. What are the things that you like? If you dislike it, hit the dislike button and let me know. Don't just, hit the dislike. Let me know why you didn't like this video so I can improve it and probably make better videos. I'll probably buy another camera. See you.
Thank you for watching. I hope you liked this video, and if yes, please hit the like button. Do you have any questions or ideas for upcoming videos? Then leave a comment Also subscribe to the channel and hit the bell icon so that you never miss any future videos. See you next time.